So this is Euro Pound analysis for Thursday the 19th of October. Now, let's just have a look what happened on the 18th. So on the 18th, we did have a bit of consolidation. Prices briefly had a bit of consolidation below the 200 period moving average. Price briefly tested the 50 period moving average, as can be seen by this candle, which had a bit of sell-off at the candle which opened at 9 a.m. and we did catch a bid. So we broke above the 200 period moving average, and we've actually stalled at the 89.45 level. The 89.45 was a previous week's pivot, and we do appear to be thing is we have not sold off heavily from that level, so we've had initial selling all the way back down to support this 200 period moving average, and again we've had a bit of selling again back into a dynamic support. So below this 89.45, this weekly pivot, we've got the currently we've got the 20 period moving average and the 200 period moving average potentially providing dynamic support. 20 period moving average is sitting at 89.29 and the 200 period sitting at 89.30. So as these moving averages move upwards, prices are going to be squeezed, and we will either see a break of 89.45, after which we'll be looking for a run all the way up to potentially we might see some weakness in around 89.80. But ultimately 90.24 would be the target. However, if we are not able to hold this dynamic support, prices would likely break down. I wouldn't anticipate a breakdown from the 220 period. I wouldn't anticipate the 50 period providing a dynamic support. I would expect a run all the way down to possibly the 400 period, sitting at 88.82, below which we'll be looking at that weekly pivot, being the 88.73. Now the 400 period has provided support in the past, so the 400 period moving average is at 88.82. Again, it will be moving upwards as with price. It depends how long price takes to trend downwards to it. So it might be all the way up to 80.90 at that point, but currently it's seen at 80.82. Now, if prices do go down to 88.73, we don't see much of a reaction indicating that there's possible support down there, we would definitely be looking at the major level at 88.51. I can't anticipate prices going much further than that, as the volatility on the euro pound tends to be quite low. But below the 88.50, 88.20 is the next possible area of interest for potential support. So that should pretty much wrap up the analysis for the execution time frame, the hourly time frame. The areas I'll be looking at, I've mentioned the 89.80, which is not marked on the chart. 89.80 is pretty much because over here on the 11th we did have a bit of a reaction there. We did sell off a little bit from there, so it'd be the scenario that we would have to definitely have a look at to see if we do see some weakness there, and the major level being 90.24. So if I go up to the higher time frames, so let's start with a monthly chart. Let's get a scale on here, correct. So on a monthly chart, what can we see? We're clearly in an uptrend. Wow. For some reason, the trend line I had on this chart is no longer there. Might have moved it, but as you can see, we're clearly in an uptrend on the euro against the pound. We have come up into an area of resistance though, which was over here on the left of the chart, which was from October 2016, the height being 92.25, and we did have some selling from that level. The selling from that level came in the form of this bearish engulfing candle for the month of October, and we're still operating within the shadow of that candle. We did have quite a lot of selling from there, and we do have to bear that in mind, even though we are in an uptrend, that we are operating in the shadow of a bearish engulfing candle. Now, currently in October, we have had prices push all the way upwards from 88.14, essentially retesting the midpoint of the candle of September. We have had some rejection so far, but so far this month we are in bullish territory. So if I go down to say the weekly time frame, just have a and so on the weekly time frame, we can see the exhaustion candle here on the 11th of September. Ever since all the way into support. The support was at, let's just get this right, it was at 88.50, wasn't it? It was somewhere around the 88.50 mark. Yes, all the way down into support. We did have a bit of consolidation here, indicating that it was an area of interest. We did have sell-offs over here as well. Now, we've come into that area there, and we did have a bit of a sell-off, and, well, a pretty strong sell-off into support, and we have had a couple of bids come into the market and bullish price action. Now, we did have this week of, we did put in a bit of a bearish pin bar this week, which was the week which commenced the 9th of October last week. So far this week, though, we are in bullish territory. So it does appear that, especially this week, the price actions negating the bearishness from last week. But we have to bear in mind that at 90.24 level would be a major level where we'd likely see some more possible selling. Even though the trend on the monthly and currently on the weekly do appear to be to the upside, we do have to be aware of the levels above of possible resistance. So if we go down to the daily chart, we can see here, what we can see here is I'd say it's positive. We've had the low here, and we've had a bit of a sell-off from the 50% retracement. I did draw Fibonacci on here, but I've removed it from the analysis a couple of days ago. But it was this rejection here was at the 50% mark. I suppose I could just put another Fibonacci back on there. I tend not to use Fibonacci, but so if I draw the Fibonacci, if it wants to work today, ideally. So there we are. So let's just get the Fibonacci on here correct. There we are. So for the Fibonacci traders out there, we can see here, it's not exactly right, is it? Let's just get this right. Oh goodness me. Come on. You know what? Let's just get this correct. Yep, it doesn't have to be perfect. It's close enough. So on the daily chart, we can see here prices reacted to the 50% retracement level and has subsequently come back down of the Fibonacci. Now, let's just get this Fibonacci off the charts so we have a clearer chart. What I see being positive here is we've had the low here in around the 87-83 level, and we have now posted what I potentially believe to be a second higher low. A higher low being bullish for prices. This thing about this higher low is we have come down into a weekly pivot in around the 88.73. So briefly traded below it, and we've also got this 20 period moving average as well, further into the confluence of that level on a daily chart. Now, this being posted as a higher low, I would expect prices to go all the way back up to test that 90.24 level. Possibly of concern is the large wick here on the 17th and the size of the candle on the 18th being quite small, almost pretty much almost a doji at the moment. So let's just have a look what actually happened there. So we opened at 89.19 and we closed at 89.26. So essentially 7 pips in the market, which is quite small, even though the ATR on the euro pound is quite low. Having 7 to 8 pips of actual movement, bullish movement to the close is it's not exceedingly positive. But however, overall, this higher low is you'd say would give us a bias towards the bullish side and a possible retest of 90. 24 to the upside. So that should wrap up the euro pound analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.